Welcome to the InterMarket analysis video update. This is a video that I do weekly, and I go through a number of different areas and break it down to look outside of the S&P 500 to see if we're getting any insights from other areas of the market. This is being prepared for Monday, July 21st. Before diving into today's video, if you find it helpful, consider a 30-day free trial to the SPX investing program. This trial lets you explore my unique approach to market analysis. Full-length daily and weekly videos are available on a delayed basis after the market closes. For immediate access, become a member by clicking on the link below. The first area that I go through does look at the S&P from a valuation perspective. We look at historical earnings reports and compare them to current price, and we look at forward earnings projections and compare them to current price. And we do a pretty extensive look at growth versus value. When growth is outperforming value, that's more positive for the market. We keep an eye on inflation, which seems to be ticking up a little bit right now, so we just want to keep watching that. Then we look at some other markets outside of the S&P, other indexes, other sectors to see how they're performing. Then I go through the 11 sectors that make up the S&P 500. First, we look at them individually, and then we do a ratio to see how they're comparing to the S&P 500. Then we check out other indexes to see how they're performing. I do some correlations between different markets. Sometimes we can get some insight from that. Then we look at some very long-term trends, like monthly charts, and really try to take a big picture look there. And then at the very end, I have a positive list and a negative list. All right, valuation. This is what we've been seeing for the last 2, 3, 4, 5 years. Really, the only time that we really came down below this was back in 2021 when we were going through that bear market and into 2022. And that came down below the red dashed line. But ever since we rebounded up out of that, we've been very overvalued on a historical basis. This is that same chart, but just goes all the way back to 1980, showing how most of the time the market is overvalued. That's why we don't use this as a timing mechanism. It's just more for information. Then we look at the Shiller PE ratio, which is a variation of historical earnings. This is coming in at 38.37. To get some perspective, we're still, and we've been this way for quite some time, between 16 and 17 when we look at the median and the mean. This also suggests the market is overvalued. Then we look at forward projections because that's what the market uses. Currently, the purple line here, these are the mega cap 8. They're coming in at 29.1. We still use that 10, 15, 20 point scale, and they're coming in at 29. So yeah, they're overvalued, but this is the hot area of the market. And this is really what drives the indexes. And as long as the earnings continue to go up, higher prices are typically justified or rationalized, however you want to say that. Then the red line is the S&P 500. It's getting above that 20 level as well. We're coming in at 22.1. Then more fairly priced, but these are areas of the market that have really underperformed. We have the mid caps and small caps. The mid caps are coming in at 16.1 with the small caps at 15.5. Then equities at record highs and PE ratios close to a record too. This is just comparing. It's pretty much telling us what we already know. What's the valuation of the market? Looking forward, and what's the S&P actually doing itself? Now we look at growth versus value. First of all, we look at growth all by itself in an uptrend and looking pretty solid. Value also in an uptrend, but not looking as solid. Actually retracing back down close to its 50-day moving average. Where we get the insight is by doing ratios between growth and value. Here we see where growth is outperforming value. Then here's an inverted version of that same ratio. Sometimes we can see some things with an inverted chart that we may not see otherwise. And so this ratio is going down, showing how value is underperforming growth. Then we look at some ETFs, a little bit longer term, going back to 2005. Growth is outperforming value here. An inverted version of that same ratio, showing how value is underperforming. Then we look at some indexes, a little shorter term here, going back to 2022. Growth is outperforming value. Value is underperforming growth. Then we look at some ETFs, growth versus value ETF. The growth is outperforming here. This is an inverted version of that same ratio, showing how value is underperforming. Then we break it down a little bit more, look at the small caps, which are really holding up quite well. We're in an uptrend with the ratio, but we've been going sideways quite a bit lately with this ratio, but it's still holding up and actually showing a little bit more improvement with mid-cap growth to value. We just can't seem to get the indexes to follow what we're seeing in the growth to value chart. This is positive and looking pretty good. We're breaking out to new highs here and in an uptrend when we look at S&P growth to value. Then we want to keep an eye on inflation. You can see on a longer term basis, we're climbing further above this declining moving average here. And that's not what we've been seeing over the last few years. This has been trending down and now we're coming back up. So in the bigger picture, we're a little bit concerned about this. We want to just keep an eye on this here. And the CRB index, which is the measurement of commodities, this is a monthly chart. We're also above the moving average and the moving average is going up as well. Then I switch over and look at a daily chart, and we are in an uptrend here, not really breaking out, pretty much going sideways, but still in an uptrend. We are also in an uptrend when we look at the Baltic Dry Index. In a general sense, when this is going up, that means it costs more to ship products in the Baltics. When this is going down, it usually costs less to do that, and now, just recently, started to go into an uptrend here. Then inflation expectations starting to pick up. We had CPI come in this past week, hotter than expected. Inflation is not coming down to the 2% level that the Fed would like to see it. And so the expectations are continuing to go up here. And we do a ratio between expectations and tips, and we're seeing the inflation starting to go back up. Typically, this has been going down over the last couple of months. Now this is starting to go back up. So we want to keep an eye on this and see if this trend continues or if this is more short term. Then some other markets. I don't have a retail chart on here. Later on, we look at some different areas of the market, but this just shows it's something I picked up throughout the week. Retail shares of trading volume has gotten back to above 20%, which that's pretty high. And we're seeing a lot of activity coming back into the number of shares traded overall. And we look at aluminum, which is in a downtrend right now. That's not inflationary. Corn is in a downtrend, and wheat has been going down as well. Fertilizer going up here a little bit here, but not really breaking out. Lumber is also in an uptrend, but not really breaking out of this recent range that it's been in. Then we say with oil, this is Goldman Sachs. We nudge up our 2025 second half Brent forecast to 66, but still expect Brent to decline to 56. Okay, all right, fine. You can go out into the future and come up with whatever numbers you want, but these are just projections. There are people that use these, and so they make decisions based on them. And oil itself is in the mid to upper 60s now. And a lot of this rise has been more geopolitical. Then gold to oil. Now, this is actually going down. Gold has been going sideways, and oil has actually been going back up a little bit. And when that happens, we see this ratio coming down. Then we look at a correlation between oil and the 10-year yield. They're having a slight tendency here to go in opposite directions. And gas is still in an uptrend here, but chopping around. Natural gas is in an uptrend, but really starting to pull back. Heating oil is just starting to form an uptrend here. Maybe as we go through the summer months, this will start to continue to climb here. Diesel has been going up too, and some of that can be geopolitical. A lot of military vehicles need to use diesel in order to operate. This is actually good for the economy. Copper, both on the weekly chart, and I go over that in the weekly video, and here on the daily chart, we're just breaking out here and really looking solid with copper. And that is more of a vote of confidence for the economy. And the copper to gold ratio. Gold's been going sideways, copper's been going up, so that's why we're seeing this ratio going up. And we're seeing this coming back up too, but it still has been declining, going back to late 2021. It's finally bouncing back up, but not really breaking above these series of lower highs that we've been seeing with this ratio. And then to give it some context, we see where overall the 2-year yield has been declining for the most part, a series of lower highs here, where we've been going pretty much sideways with the 10-year yield. Gold, this is what I've been talking about. This is the gold ETF. It's not the futures contract. We just kind of spot ourselves all over the place here, but really it's been going sideways. Silver, we're seeing more of a breakout now, but over the last few days, it's been going sideways. And when this is going down, that means that silver is outperforming gold. And then we also plot the US dollar index down here, where this has been declining overall, but we're still pretty much neutral with this ratio, with the correlation at the very bottom. So we're not really getting any insight there. The dollar on the daily side came all the way back up to its 50-day moving average, and now it's starting to go back down. You can see it came back up to the 50-day moving average before and then declined after that. Stocks like a weaker dollar. It's not very good if you're traveling outside of the US, especially to Europe or other countries that have been seeing their currency go up against the dollar. But internally, the stock market likes a weaker dollar for conversion rates, and import exports tend to be more favorable. Then we look at the euro, which has really been looking pretty solid lately as the dollar has continued to go down. We also put the Japanese yen on this chart as well. And then I break them out individually. The euro against the dollar shows the euro in an uptrend, even though it's been pulling back. And the yen's been seeing a little bit more weakness, falling further below its 50-day moving average, but still in a longer-term uptrend. And the British pound falling a little bit below the 50-day moving average, but also in an uptrend compared to the dollar. Mastering the stock market is challenging and can take decades to achieve. Most beginner traders and investors feel overwhelmed and often fail. Stay ahead with the SPX investing program. Members gain access to the full program. Other options include immediate access to videos as they become available. Alternatively, the daily and weekly newsletters may be helpful. Click on the link below to find out what's best for you. Then I often show this in the daily videos. This is the weighted versus equal weighted version of the S&P. As we've been going up a little bit here and setting some recent all-time highs, we're not setting new all-time highs with the equal weight version of the S&P. A lot of this is still being driven by the bigger stocks. When this is going down, that means the equal weight version of the S&P is underperforming the weighted version. Then we are in a newly established uptrend when we compare stocks to commodities. Now, commodities are in an uptrend, and they're doing pretty good right now. That's why we're watching the inflationary things. But stocks are doing even better, and so that's why they're outperforming. This is an inverted version of that same ratio, showing how commodities are now starting to underperform stocks, even though commodities by themselves are in uptrends. We look at the NASDAQ 100, which is outperforming the S&P 500. The S&P 100 is outperforming the S&P 500. The NASDAQ is outperforming the S&P 500. And this is kind of surprising here. The NASDAQ 100 coming all the way down to the 200-day moving average. Now, the NASDAQ 100 and NASDAQ are setting all-time highs, but the NASDAQ is actually outperforming, which could be more positive because that's a broader index. You could also treat that as being more negative. It's like, oh, the NASDAQ 100 is lagging. But other areas of the NASDAQ 100 are still looking pretty solid. So I'm treating this more as a positive rather than a negative. Mega cap stocks are outperforming the equal weight. That's where a lot of the strength is coming from in the stock market. And then we look at small caps, which continue to underperform the S&P. This also shows the red ratio. That's the small cap to S&P ratio, which continues to go down as the S&P, the blue line, has been going up. We look at the robotics and AI ETF, showing some improvement here, breaking out a little bit above the rainbow. But when we compare it to the tech sector, it's still underperforming this particular ETF. There's another ETF that I'll show later that's actually doing much better. Mega cap, uptrend, all the lines are going up. This is where the strength is coming from. The Dow Jones Composite Average, which is the Dow, the transports, and the utilities, not quite back to a golden cross here yet. Some of this has to do with the Dow. Transports have been showing some improvement. Utilities have been drifting higher here, and that's been helping the Dow Jones Composite Average to improve. And then small caps continue to underperform tech and have been for quite some time now. We look at the semiconductors, which overall are outperforming tech. Now, tech can do well, but it's even more positive if semis do even better. We've been falling back over the last few days here, but for the most part, this ratio continues to go up, and that is positive. Low volatility, pretty much chopping along sideways, still in a not a real solid uptrend, but still remaining in an uptrend. But when we compare it to the S&P, the low volatility ETF is really underperforming and in a downtrend. Energy is underperforming the tech sector. And then we take out US stocks and then say, how are all the stocks in the world doing? This is showing how when you include US stocks back in the mix, this is going up. But when we take US stocks out, which should have happened here. Okay. Oh, that chart will come up. This one. This is showing how global stocks are still outperforming US stocks. So I got this one in the wrong order. Growth continues to outperform government bonds. And we see that in other charts as well. Then I can skip over this one. The tech sector is actually outperforming the 10-year yield. This shows how the 10-year yield is underperforming the tech sector. Discretionary, really improving. Starting to see a golden cross here with this ratio when we compare it to staples. That's more positive for the market. Staples showing a death cross here when compared to discretionary. Gold really pulling back as it's been going sideways, and for the most part, the S&P's been going up. That's why this ratio is going down. And gold is still outperforming the dollar. And even though gold's been going sideways, the dollar rebounded a little bit. The dollar's not showing a tremendous amount of strength, even when it's been bouncing, at least yet. And we look at the advanced decline lines across different indexes. These are all still holding up. They're above advancing moving averages. And we look at what's called traditional Dow theory, which looks at the Dow on top. We're not quite back to an all-time high here. We're doing better, but still underperforming when we look at the transports. And then these are the utilities, which have just pretty much been drifting higher and higher and higher. Now, I say this in pretty much every video where I talk about the utilities. That's typically considered to be a defensive area. It's what widows and orphans like to have because they pay a lot of dividends. Now, because of AI, because of crypto mining, because of electric vehicles, it's like utilities are now becoming a growth area. And that's why we're seeing utilities holding up quite well now. We look at the Dow versus the transports, and as the transports have been doing better, we see this ratio going down. When this ratio is going up, that means the Dow is outperforming the transports. And the transports were doing pretty good, really starting to make a comeback, but they pulled back recently here. And the transports continue to underperform the S&P. And the correlation is dropping off. It's usually pretty strong. When we look at the S&P versus the Dow transports, it's most of the time we're up in this red area. Now it's coming down a little bit. We'll keep an eye on this one. And we're looking at an alternative to traditional Dow theory, where instead of using the Dow, we use the S&P. That's just coming off of recent all-time highs. Instead of using the transports, we use the NASDAQ. That's just setting new all-time highs as well. So we're seeing confirmation there. Now, we're not quite back up here to this all-time high when we look at the equal weight version of the S&P, where we are setting recent all-time highs with the QQQ equal weight. Little bit of a negative confirmation here, but they're still both really doing quite well. The FANG index going sideways pretty much so far for the month of July, but they are in an uptrend. These are the really big stocks like Facebook, Apple, Amazon, Netflix, Google. And the Wilshire, still looking good. This is a broad market measure in an uptrend there. Another broad market measure is the total US stock ETF, which is doing quite well. ARK, and I only show this because so many people are into this ETF, and it's been such a heartbreak. When it was really going up in 2020 and into 2021, a lot of people got in up here, and then it just went down. It's doing better, but it's not showing the explosive growth that it was in the past. The NYSE composite just coming off of setting recent all-time highs and in an uptrend. High leverage loans, another barometer of the economy. This is still looking pretty solid. All stocks, which includes U.S. and international stocks, and most of the strength is coming from international stocks, which is really helping this index to go up. Bitcoin, it got up into the 123 range there, pulled back since then, but it is in an uptrend. Emerging markets are also in an uptrend. You can see more conviction here than what we've been seeing lately with the S&P. And just kind of going sideways right now with the Japanese Nikkei index, still hanging around those 1989 levels. And then another thing that did change this week are the micro caps. Now, the small caps and mid caps, they're still languishing a bit. We finally are seeing a golden cross here with the even smaller stocks, the micro cap index. Semiconductors coming off of setting recent all-time highs and in an uptrend. That same ETF here, but just looking at a rainbow of closing prices. This is the other ETF, the AI Tech ETF. This is setting new all-time highs and in an uptrend here and performing much better than the other ETF that I showed earlier. Then we look at the S&P, the Home Builders ETF, and we see that there's a pretty strong correlation between the two. It's when they get out of line with each other when we really pay more attention to this chart. And trying to turn up, it's still in a downtrend in China, still in a downtrend here with emerging markets, seeing more of a downtrend in Europe right now. We're improving, but now rolling back over in Japan and still looking a little bit more positive in the US. And this is a monthly chart of US stocks to world stocks, still going up here. It's performing okay, and we're seeing a little bit of an improvement with the PPO. This is a long-term momentum oscillator. Then looking at bonds, we are still above the 50-day moving average with the 10-year based on price. Total bond ETF is in an uptrend as well. And then a monthly chart of the stock to bond ratio showing stocks outperforming. This is a daily chart showing how bonds are underperforming. And the Prang World Bond Index, it's actually falling back just a little bit here, but it's still in an uptrend. And the Dow Jones corporate bonds, just in the latter part of June, finally had a golden cross here. They've been pulling back, but all of this is happening above the moving averages, so this is still in an uptrend. Stock to bond correlation, almost getting more into the neutral area right now. And then we look at investment grade bonds. These are corporate bonds, high grade bonds that are considered more safe. They pulled back to their 50-day moving average, and now they're starting to go back up, but they are also in an uptrend. Junk bonds, which are high yield, people would rather assume that risk and get that yield. These are coming off of just recent all-time highs. And then the junk bond ETF, also recent all-time highs here. We look at a ratio, not really seeing much of a change here when we compare riskier bonds like junk bonds to more conservative bonds, which would include government bonds. And then the junk bond to government bond ratio, this is setting a new high here. So the junk bonds are still outperforming. And then I've been showing this for a long time. This is just showing how we're establishing a higher range of what we had been seeing going back over the last 40 years with the 10-year yield. Then this is a daily chart of the different maturities. They were going back up here, but over the last few days, they've been coming back down. Then this is international. This is a weekly chart. We want to keep an eye on Japan in case things really start to break to the upside. This is what happened almost a year ago with the end of the world day when everything just came down. The VIX went to like 65. And if you hear some banging in the background, I apologize for that. But we just want to keep an eye on this because if interest rates go up, that could really cause some problems in Japan, which could spread throughout the globe. And then we look at some relationships between stocks and short-term bonds, setting a new high with this ratio. The S&P 1500 with short-term bonds, setting a new recent all-time high with the ratio. Another broad market measure, not quite back to an all-time high, but still looking pretty solid. The tech sector is outperforming 3 to 7 year bonds. And this shows how 3 to 7 year bonds are underperforming the S&P. And we look at the volatility of bonds, that's the MOVE index, and the volatility has been coming down. And then as we've been going up with stocks, the VIX, which measures the volatility of stocks, that's also been coming down. And there's a pretty high correlation between the volatility of stocks and bonds right now. This is not measuring price. This is just comparing the volatility of both markets with each other. The S&P or stocks versus the 10-year yield, we just see a recent golden cross here showing how stocks are underperforming. Then a long-term or look at the long-term bond. This is a monthly chart here. We're still declining and we're still seeing the moving average coming down. And then we look at a ratio between the long-term bond and commodities. This is showing how the long-term bond is also underperforming there, where we've been seeing the longer-term chart of commodities going up. Then we look at the 11 different sectors. Materials, just about ready to see a golden cross here. They've actually been doing quite well lately, but they're still underperforming when we compare it to the S&P. Communication, a huge growth area, been pulling back a little bit recently and starting to fall a little bit below its 50-day moving average when we do the ratio with the S&P, but it's still one of the more solid areas. Then we look at energy, which has just been all over the place. It's in a downtrend, just chopping up and down here, and really underperforming when we compare it to the S&P 500. The financials pulling back a little bit here, and this is what's been causing us some concern. Now, banks did report this past week, and they're a huge part of the financial sector, so maybe we'll see a bit more of an improvement here. And this is what I show in the daily videos, the ratio between the financial sector and the S&P. We're dropping below the 200-day moving average, but lately we've been trying to bounce back up. And industrials, one of the stronger areas of the market and looking pretty good right now in an uptrend, also outperforming the S&P 500. Then the tech sector, another big growth area here, setting all-time highs within the sector itself, and one of the stronger areas when compared to the S&P. Staple sector, pretty much going sideways right now. This is more defensive, so it's not really in a downtrend. It's in an uptrend, but it's holding up for the most part, but really underperforming when we compare it to the S&P, and that's more positive for the market. When this ratio is going down, that means staples are underperforming. Real estate just kind of chopping along here. Doesn't really know if it wants to be in an uptrend or a downtrend, but it's really underperforming when we compare it to the S&P. Utilities, again, it could be a defensive area, it could be considered a growth area. Really doing pretty well right now. And it's underperforming the S&P, but possibly setting some kind of a base here. We'll see if there's any more follow through with that. This is what I look at and show in most daily videos. When this is going up, that means the S&P 500 is outperforming utilities. Healthcare, a defensive area, really struggling right now and really underperforming the S&P 500. Discretionary, improving. We saw a recent golden cross here at the beginning of July. And still in a downtrend when compared to the S&P, but it seems to be stabilizing. We want this ratio to really go up. That would be much more positive. Semiconductors, with the SOX index, we're not back to an all-time high yet, but we are in an uptrend. And the Dow Jones Semiconductor Index, it is at an all-time high and also in an uptrend. Then here's the semi to tech ratio again. For some reason, I seem to need to show this twice, but this is more positive right now for the market. We're also improving when we compare semiconductors to the Dow. We want it to go more up to this blue line to be more positive. Longer term, we came a little bit below the 200-week moving average, and then we've been bouncing up since that time. Then the intermarket analysis chart, gold, it's been going sideways, but it's still the best performing asset in 2025, followed by stocks, then commodities, then oil, then bonds have now slipped down to negative year to date. And the dollar is still the least, it's the worst performing asset so far in 2025. Okay, then we look at, sorry, I'm losing my voice here. We look at correlations between stocks and the dollar. Fairly strong tendency to go in the same direction. It's been going up as the dollar's been going up. We'll see if that can continue. Then stocks to the 10-year yield, neutral. Right now, the S&P or stocks to oil, trying to come back up here into this neutral area. And then the tech sector to the 10-year yield coming down, getting closer to this neutral area. Slight tendency to go in the same direction. And a slight tendency to go in opposite directions when we compare stocks to the 2-year yield. With each video and course, members learn to implement the consensus approach, a unique analytical method. Unlike relying on a few indicators that eventually fail, this approach overcomes analysis paralysis by using the weight of the evidence to draw conclusions. Developed over decades across all market conditions, Explore the SPX investing program and start with a 30-day free trial. And some long-term looks here. This is a monthly chart of the NYSE, setting all-time highs above an advancing moving average. But the Copic curve is continuing to decline, and it started to roll over right at the beginning of 2025. Another monthly chart looking good here with the NYSE and going back up with the NYSE record high percent index. When this is going up, that's more positive. Then a monthly chart of the S&P above an advancing moving average and starting to turn back up and look more positive with the PPO momentum oscillator. Then we look at stocks to the CRB index longer term. When this is going down, that means stocks are underperforming. But the chart itself of the S&P is still holding up above the moving average. Then we look at another stocks, and then in the US to global stocks. Still, it's come down here to this long-term moving average, and the KST is going down, but it's still holding up for the time being. There have been periods of time since the April lows where U.S. stocks are trying to come back and regain some leadership, but they haven't been able to quite do that yet. Then at the very end, we look at all the positive things, and most of the things are positive right now, including growth and value all by themselves. Copper, the euro, the pound, and the yen, when you compare them to the dollar. The CRB index, gold, and silver are in uptrends. The low volatility ETF going sideways, but it's hanging on to an uptrend. The mega caps, the tech sector, semiconductors, including stocks, indexes, and ETFs. All the different ways we look at semiconductors right now, they are in uptrends. Staples are in an uptrend, and then bonds based on price, whether it's the total bond ETF, high yield, investment grade, junk bonds, world bonds, corporate bonds, they're all still hanging in there when we look at price. And now we have the Dow, which just had a recent golden cross. That's now on the positive side. And then the microcaps, that's a new addition to the list, where we have the NASDAQ 100 and the NASDAQ setting recent all-time highs. The NYSE is in an uptrend. And then the broad market measures, both the Wilshire 5000 and the total U.S. stock ETF. All of these are in uptrends. It's just the mid caps and the small caps that are lagging. The FANG index is in an uptrend. ARK is in an uptrend. High leverage loans, that's good for the economy. That's in an uptrend. Emerging markets, all stocks, and then Bitcoin is in an uptrend. Then a pretty short list here when we look at the negative things. The dollar, the Dow Jones Composite, mid caps and small caps are the real main thing here. But we are seeing some improvement with the Dow Jones Composite. Thank you. I hope you found this helpful. Have a really good weekend. I will talk to you in the next video.